I hope everyone's doing well. So, welcome back to another lesson. I mentioned that this lesson should hopefully be a game changer for a lot of people. The point of this specific lesson is to bring together a lot or almost all of the teachings that I've given you guys so far. And even this, in a way, we can call it a kind of, brief outlook. More so, it will be less reasoning, but more, kind of like a checklist of what I do. And I've actually made a complete checklist, a kind of quick overview that you guys could use if you want to. You can take and edit it, add your own stuff and whatnot. But one more thing, just, apologies for getting this lesson out late. Been quite busy this week. I've had a couple of Zooms with some of the guys in mentorship. So, yeah, just helping them out and stuff. Had some delays. But yeah, hopefully this is going to be a very, very good one for you guys. So let's talk about the daily candle, right? I know I've got a lesson on the daily candle, but when we trade intraday, and we execute somewhere here, right? Somewhere in here, somewhere in this daily candle, we try and find trades, right? So one thing, right, that's very important to note. We typically expect Asia to range. What do we have on, or rather above and below a consolidation? Liquidity, right? We'll have sell side liquidity here, buy side liquidity here. Now, this is going to be very important. Just remember that I mentioned that. Keep that in mind. So here, I've written the plan. I was just thinking about, what do I do? When I sit down, when I think of a trade, what are the main things that I consider? What is my, kind of bare minimums? And these are not concrete. So, kind of as a disclaimer, like, please, this is not it. It's not conclusive. There's more things, but it depends on context. I've written, let's consider the weekly range, the daily range. Some days I might be considering a 4-hour range. It will depend on context, but weekly and daily is a must. Considering the time of week, what day is it? What weekly profile am I in? Bearish, bullish. My daily bias, high time frame arrays, lick pause. We'll get into this and these concepts that I've taught. So, of course, if you're on this lesson, I'm hoping you've watched everything first. So everything here should make sense. AR, right, on the next point stands for Asia range. Anticipating a run on Asia range liquidity via Judas swing. Anticipate a market structure shift during London. OT entry to get into that market structure shift. Take the trade towards a draw on liquidity. So cool. Seems quite simple, right? I mean, if you've watched everything, I hope you can understand everything here. If you can't understand everything here, please come to me. Should kind of, in a way, be a bare minimum now. Should be able to get all of this. But yeah, that is pretty much all the, I guess we can say, compulsory things I'll consider every single time to build a framework. Once we have a framework, we can sometimes play within that framework for a prolonged period of time. You can use the same framework for a whole week sometimes, perhaps. And I think with trading, one thing I will recommend to you guys, very important, that we do write down things. We understand the importance of when to use something rather than, just how to use it. It's very, very important, especially the idea of doing top-down analysis. Even me, the way I've written this plan, it involves literally the first things that I start with, working downwards. And I hope it's quite logical. We start on weekly because it's the higher time frame. We move to daily. We consider news because we know it affects price. Consider the daily bias because, we're trading on that specific day. Consider the arrays that were around, right? So I hope some of you just listening to this are able to visualize some of these things and understand what I'm talking about. But let's get on the charts and try and actually frame all of this. Okay, so one thing I forgot to mention before we, carry on with our plan, let's say, was ADR. So, if you've already started to write down and copy that last slide, please make sure to add ADR in, and I'll tell you guys in a second where it's going to be relevant. So cool. This is a weekly chart. Let's delete this for a second. Yeah, this is our local weekly range. We understand that price is bearish, right? Very, very clear. We had a range from here to here, price retraced to the premium. We then had a range from there to here, price retraced to equilibrium. Then had a range from here to there. A bit of a smaller range this time. As you guys can see, price, pushed into the premium, this weekly order block. And then we have our current, what we can call our local weekly range. So cool. Now that we have a weekly range, right? Episode, I believe it is 10.5. We speak about ranges. If we're bearish, which we are bearish here, we want to move into our premium, and from our premium, we'd like to see a move lower. Correct? So, coming into this week, open down here. Would it be fair to say, we wanted a bullish sweep? I'd say so. We wanted to move into the premium. Definitely this imbalance that existed around this area, we definitely wanted to come into that. And coming into our daily time frame, right? You wanted to move into this imbalance. These order blocks, right? Quite nice. Cool. The next thing I've written is let's consider our daily range. So our daily range, right? We can consider from potentially this high over here. This high to this low. But I'm going to disregard this, right? And I'm going to stick to our weekly range. The reason for this is, right, most people will think if we take this high, that we've had a daily market structure shift. In this context, this is what's very important, right? Context, understanding what's happening around price. This isn't true. Above this high, right? Above this high, what we have is a volume imbalance that we initially wanted to target earlier. We never reached it, so let's just draw it on for now. So a sweep on this high, right over here, which is a daily high, into this imbalance, this volume imbalance, and even this, actual fair value gap will not count as a market structure shift. Why? Because we are still in a bearish weekly range. This is why context is very important. This is also why we start on a higher time frame. Okay, cool. So let's take a step back. Let's think about what we've done now. We've marked our weekly range. We understand our daily range, and of course in this instance we have not marked it. Understand when coming into the weekly premium, and at the moment these 4 candles are a daily order block. We have traded into them and we've had a reaction, right? So now there's one of 2 scenarios. We're either going to trade higher, yep, and we're going to go past this and we're going to go into this imbalance, this volume imbalance, and of course the lower time frame fair value gap. Or we've had a reaction at this order block and that's it, and we're going to start making the move towards this discount, the low down here. Cool. Why is that important? If our target is above, what do we want from the next daily candle? To go up. If our target is below, what do we want from the next daily candle? For it to go low, right? Quite simple. I believe the next daily candle is still gonna, start reaching up here. Why is this? Let's consider what the last daily candle done. The last daily candle came down, filled this imbalance, even pushed a little bit lower, and rebalanced this area. this is the Euro USD, right? Let's come on to our DXY for a second. Now, this is where, context once again comes into play. For DXY, we're currently in a market maker sell model. And I would really like to see these lows go. This sell side liquidity. And under this sell side liquidity, I would also like us to move into this volume imbalance before a reversal. That is what I would like to see, right? And if I'm adamant, if I'm sure that this is my target, then I can also anticipate similar from the Euro USD, meaning I anticipate a move up, right? Cool. So in this daily candle, which has already opened, I'm expecting a bullish move. So let's come down onto our 4 hour. Understand that we formed a 4 hour low here. This is of significance because we don't want to break this, right? We understand that we have a 4 hour imbalance here, right? Especially once this current candle closes, we're going to have an imbalance unless we fill it within this 4 hour candle. Now, what I like to do is use my session indicator. I've customized, right? Let me come on a lower time frame. I've customized my session indicator so it shows me 3 things: the Asia range, London kill zone, and New York kill zone. Not only that, it's showing me specifically ICT's Asia range. I don't think a lot of people use this, right? ICT's Asia range starts at 8 p.m. as you guys can see, 8 p.m. New York time to 12 p.m. So that the New York midnight price that I'm always on about, very easy to identify because we know it's down here. It's here. Once this Asia range ends, we have a New York midnight price. Of course, had the previous day's price action. So cool. Let's head back to the plan, right? And quickly cover what we've gone through so far. Okay, so we figured out our weekly range. We considered the daily range. And now we can consider time of week and news. So today is a Thursday. There's no significant news. There's news, I believe, for Canadian dollar. You guys can go check, right? If you're watching this video, I've recorded this video for the 6th of October, which is a Thursday. Now, right, we need to consider our PD arrays. As I mentioned, that 4 hour imbalance, our liquidity pools, and of course CBDR, the Asia range forming, and of course, we'll come on to these things in a second. Okay, cool. So now, right, back on the charts. Let's, like I said, it says in brackets, we want to consider our high time frame arrays. So, I don't like to consider below 4 hour. So what do I see on 4 hour? I consider this cluster of highest liquidity. So I'd like to mark this as a potential target. I want them to go. I also understand that we do not want to see this low get taken, on the 4 hour. And if we come out to our daily, I also understand that this is the previous day low, and we could potentially have a run below this. I don't think we'll get a run below this, but it's possible. I think it's unlikely, right? In terms of marking PDH and PDO, previous day high, previous day low, we have to be realistic, right? Remember that thing I said to consider when I first jumped on the chart? ADR. If you calculate your ADR, right? So how do we calculate ADR? Add, do the high minus the low of this day, this day, this day, this day, this day. So the last 5 days, 1, 2, 3, 4, 5. And we'll have our ADR for today, right? The previous daily low is about 70 pips away. I don't think that's a realistic move, especially considering I'm bullish. I don't want to see a move that low, because then I don't think we get a move, all the way back up, right? So again, we consider, the next time frame. And of course, we've realized we have this imbalance here. In these scenarios, when, in a way, I guess we can say, I have a lot of data to go off, I will also consider some other ranges, such as the hourly, right? Seeing what price is doing. So now, right, let's come on a lower time frame. Turn our market session indicators on. Just to make things clearer, right? We're gonna go off yesterday's price action. So now, right, here's something. Please make a note of this. If the Asia range is not between 30 and 40 pips, we don't like to trade London. 30 pips is better. 30 pips is ideal. If I use my measure tool, we consider this Asia range. That is almost 30 pips exactly. 31 pips. That's lovely. That's what we like to see. Cool. Now we know Asia range is 30 pips. When we jump on charts, of course, I'm assuming you're jumping on charts around London kills on time. At least most of you are. We can also consider our CBDR. CBDR 2 p.m. Of course, if you guys have watched the episode, we consider the We consider the lowest low within that time and the high. And CBDR is 30 pips, right? So cool. We can use both. Both are valid. CBDR can be used, bear in mind, the projections can be used to plot the highs and the lows of the day. So of course, in terms of plotting the high of the day, it wouldn't have been, great use. It was placed during London, but, of course, the CBDR itself, you can have projected it higher. Now, cool. Let's think about this, yeah? Let me turn my indicator off. We know this is our Asia range. Remember what I said at the start? What do our consolidations have? Liquidity. Buy side liquidity and sell side liquidity. This is how it works, right? You guys have watched my lesson on offset accumulation, offset distribution. Let's talk a little bit of theory here. If today's day is bearish, right? If the daily candle is going to be bearish, what do you want to see price do? What is this? Taking Asia's high and moving lower. What is this? Offset accumulation, right? We take this buy side liquidity over here. Let me delete this just so it's clearer. I hope you guys get the point now. We take the buy side liquidity up here, right? We sweep this. We even sweep these highs here. And we offset lower. That sweep funded this move lower, right? That's how I explained it in that lesson. So, what am I saying here? If your bias for the day is bearish, which away, if we just come here, you could have expected a bearish day as we traded into these order blocks, right? Then what do we want to see? We want to see a run on Asia's high. Because what is London? London offers us a Judas swing. What is the Judas swing? Judas swing is a move in the opposite direction to the day's bias. Bearish day, Judas swing, up. Move lower, So this is the move that we want to get involved in, right? Now there's a little bit of a problem. I like this example. Looking at the 15-minute time frame, it's a very clear and concise example. I've taught you guys a lot of things, but it's very important to realize we do not, one, have to use everything every day. And two, everything will actually not be genuinely usable either, if that makes sense. Don't try and force things. For example, the CBDR to plot the high of the day served no purpose. But Asia range being that 30 pip, that's what we like to see. And it led us to, know that we can trade London. So cool. London now runs Asia's high. Now my, kind of ears are up. What's the next thing I can expect to run on? Previous daily high, right? Which is this high over here. We don't get that run. So first of all, I would have been feeling a bit, let's say suspicious about this trade. But this displacement downwards, right? Remember, I've mentioned displacement many times now. Shows me price is very clearly bearish, right? So when this market structure shift takes place, right, when we take this low out, I expect a retracement. So what happens? This is the range that forms. Now, what I've taught you guys, right? We're shorting. We consider the first premium array. First premium array, mitigation block. These two candles, they are a mitigation block. Or sorry, rather breaker block. My fault. It's a bit late. We consider this breaker block because why? This is a market structure shift. So what did I expect on this day, on this Wednesday? I wanted price to come back into this, right? Price didn't give me that trade. So guess what? I didn't trade. It's just how it is, right? Price will not behave how you want it to all the time. Now, what else can we have done? We could have been on a lower time frame looking for an entry. But guess what? Even the 5 minute did not offer a great entry. In the 5 minute chart, we have this over here, this breaker. No clear entry. No retracement to it, right? Let's come even lower. Let's see if we find another one. I genuinely just want to see if we find an entry because I didn't hop on the lower time frames. And me personally, I will never go under the 5 minute to find my entries. I just don't like to do that personally. Now, here's something interesting. Something I hadn't spotted earlier. This is a market maker sell model. Initial consolidation, leg up consolidation, have that SMR because why? Because we swept liquidity all the way over here. Nice, and we get that displacement down. So this could have been a nice trade. This SMR actually may have offered a premium short potentially to this low. Well, no, just about, right? I hope you guys understand what I'm saying. I hope I'm not going too quick. We had an SMR, we have this range because the market structure shift occurred at this low. So we have this high to this low. If I just move it about a bit. Cool, and you guys can see we get a retracement to the breaker block, right? This candle here is our breaker block and this imbalance, but we don't go into the premium. You could have still traded this off this imbalance. And of course, if you traded this market maker sell model from up here somewhere, we trade to the bottom of this consolidation, you would have had a very nice trade, very quick and efficient. But cool, not to worry. You've come on charts, you've understood your Asia range, you've seen your London do this, you're like, oh, I didn't find an entry today. No, London didn't give me that initial MSS. The initial market structure shift didn't come OTE. What am I going to do? Is the day done? No. If you've had a market structure shift here and it's been very clear, you now know that price is definitely, bearish for the remainder of the day. Or at least you can be very confident it is. What does that mean? That means you can hunt for shorts for the rest of the day. Now, I'll be honest, the price action was not nice. However, in between, especially New York as we open, you guys can see we run this high, right? And we formed this range. And we were offered a trade here. This is during New York kill zone. Now, I'm not saying I took this trade, but this is my point. You know that price is bearish. So what can you do? You can sit on your hands and you can wait. And you wait for these shorts. We had an opportunity here. You could have looked at your first array. This imbalance. You could have potentially shorted as such. You know, here, maybe you take the order block entry. Me personally, I would take, you know, the imbalance. Set our stop loss there. So I'll take a profit here, and we would have had a very modest 1 to 2. Nice trade, right? And then, what does price do? Offer you another trade. From this high to this low this time. So let's delete that other fib. Sorry, hope that's not confusing. Now we get another retracement into a premium. What was our first array? You know, this fair value gap, and of course the mitigation. So what could you have done again? Shorted again, right? So let's just say we shorted again. Let's say this time we take it off the mitigation block. Stop loss at the high. Again, this is during the kill zone, so it's in a way an optimal trade. And we have another 1 to 1.5, 1.5% there. This is assuming we target the low, and we don't target lower. So now, why could we target lower, right? What's the reasoning behind targeting lower? That thing I mentioned, ADR. If you know your ADR, right? Let's say our ADR is here. So, rather, the high of the day is here. We know this now. We're fairly confident this is the high of the day. Let's assume that the ADR is about 100 pips. So, okay, cool. If the ADR is about 100 pips, when we were shorting, we can at least short to, you know, here. Right? We can assume that price will meet that ADR, and once we've met that ADR, we don't really expect to short anymore. Now, I just made up that 100 number. If we really go back and check, the ADR could have been 120, could have been 130, could have been anything for the past 5 days, and it would have allowed you to short lower. But regardless, selling opportunities were offered. Yeah. So what am I doing here? Let's go back. Let's rewind all the way. Hope you guys can't hear my laptop. The fan's very loud. We understood the weekly range. Then come to our daily. We understand we've had a reaction here, right? I want price to trade higher. So did I partake in shorts? No, I didn't, right? I'm being honest with you guys. Just how it works. Me personally, I would rather see one more confirmation that we're bearish, you know, for us to take out another 4-hour low, for us to trade lower today, and then I'll be like, you know, cool, we're bearish. I don't really expect to go back into that, you know, up here. But I do think we'll go up there, you know, based on what the DXY is doing. So, cool. We then come, have our chart, check on our 4-hour, we check on our arrays, we understand we have imbalance here and whatnot. Now, bear in mind, I'm recording this at night, so I have this imbalance here. You know, if you open the charts at London kill zone, it'll be very different. You might have a, you know, different order block formed or whatever. So, of course, it depends on context, as always. Come to a 15-minute usually. Right, now let's imagine it's a new day. Wait for the Asia range to form. You know, I consider my CBDR. My CBDR has formed, right? So from this candle, we consider the low, and up to 8 o'clock, which is start of Asia. This is 54 pips. So, you know, you guys have watched the CBDR lesson, 54 pips. You know, we can brush that. We're not using that. So far, where's the Asia range? So far, it's about 22 pips. You know, we want it to go to that 30, 40 mark. And of course, we can anticipate this. Now, I've given you guys the framework for how I look at each daily candle, right? I've considered, you know, the Asia range. You know, we're going to have the sell side liquidity, the buy side. In this instance, am I marking previous daily high, previous daily low? No, I explained why. You know, in this scenario, I don't think it's achievable for price to reach there. And other times, you know, is achievable. Usually, once again, it depends on context. If you guys aren't, comfortable enough understanding what I mean by based on context, and it's confusing you, do this. Look, mark out your previous daily high, mark out your previous daily low every single day. Just mark it out, right? How long does it take? It takes you 20-30 seconds. It will change every day, but you can just do it. So do that, and then it will just be easier to see if price trades there. You're going to see a price trade there, or it may not, and you don't really lose anything. But we definitely anticipate the run on Asia, definitely. And if the previous daily high and previous daily low are in reach, we also anticipate the run on them. But of course, what are charts, right? Let's talk about basics. What is CPD, or what is Asia range? The last thing I want to leave you guys with, they're points of data, right? 30 pips, blah, blah, blah. These are all numbers, but what is it? It's data. This data is giving us context. What else is context? What else is data? This market structure shift, right? That market structure shift that occurred. When you're here and you think, oh yeah, we're going to run the previous daily high, but this market structure shift occurred, and you see that 1 minute market maker sell model, you can be fairly confident that we're going to be bearish from now, right? For the remainder of the day, we're going to expand downwards, because remember what happens in each candle. We typically contract early in the candle. So what was this move up? Contraction to form the wick above. And what was this whole down move? This was the expansionary move, right? That's important to note. These are all points of data, and that is what your context really is. It's the data that the charts are giving you. You have to consider it, and you have to be very dynamic. This is why there's no one set model. When we trade, it changes every day. It changes because the charts are different every day. The charts change. Therefore, what we see and what we expect will also change with them. Quite basic, but it's just applying a bit of logic. And that's why I don't want you guys to get stuck on, oh yeah, this is the model, this is the model. In itself, this is the model. London makes a run on Asia high, potential run on previous daily high, previous daily low. We anticipate a 5-minute market structure shift intraday. We expect the market shift to come OTE, premium if we're short and discount if we're buying. And then we sell it towards the drawn liquidity. How do I decide to take profit? You can use your ADR. You can try project it with your CBDR, whichever way you like. Or if you want, we can keep it simple and just target the low. We can, take the 1 to 2. If you want, you can target the other side of Asia. Simple trade. Take whatever you're comfortable with. Me personally, I like taking my quick trades. I want to be in and out of the market quick. If it's a 1 to 2, I'm very happy. Any more than that, I'm extremely happy. You have to figure out what works for you. But please, 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 everyone listening to this right now, write down a plan just as I have. Please include ADR in it. ADR, one of my favorite things to use. Don't miss that out. So I don't know how I managed to miss it out. Any questions you have, any setups and plans you guys make, please send them to me. I'll take a look at everyone's. I'll check through it. We can go through it if you're missing anything, if I think you should add anything. But that's about it from today's lesson. I do think there were a lot of things to take in today, right? But I don't think I really introduced you guys to anything new. All this lesson was a combination of everything I taught you separately beforehand. So if there's specific things you're struggling with, go and rewatch those lessons. If you're still struggling, come to me. Of course, I'll help you. But again, like I said, everyone make your plans and be prepared when you're on charts. Don't jump onto charts and try freestyle. That's not how you stay in this game for a long time. It took me a while to learn that. So I'm telling you guys now from first-hand experience. The sooner you make a plan and you start sticking by it, the better it will be. And trust me, it's not going to be something you regret. As usual, any questions, any help, just hit me up. All my socials are there. You guys can @ me in chat or PM me.